The four-year cycle. The four-year cycle,
Okay.
I believe, is baked in because it's hard-coded around the halving. And the halving creates this impetus for price to rise. People FOMO in, and we get above fair value. Inevitably, an asset either stays at above fair value and grows into it. Now that's certainly possible. You look at like NVIDIA. Is NVIDIA going to stay at a crazy, ridiculous price? And is the value going to grow into it? Or is it going to
I
crash
think so.
down back to
I think
fair
it's
value like Cisco did, like Microsoft did, like Intel did? Here's the crazy thing. In 2000,
Bitcoin is the world's most valued currency by market cap. Its coin price reached around $73,000 on Monday before dipping below $71,000. Bitcoin climbed 12% in this quick rally from $65,000 to $73,000 per coin. This happened even as Bitcoin prices remained plummeting, and the sell-off may last a few weeks. Bitcoin purchasers anticipate another major positive that will assist other spot Bitcoin ETFs easily offset Bitcoin outflows. Spot Bitcoin ETF issuers like ARK Investments' Cathie Wood and Bitwise's Matt Hugin have said wirehouses will approve them. Cathie and Matt believe this is the next wave of ETF investment and the most significant. A crypto enthusiast named Apor Abacus stated on his previous account last week that two major investment institutions are battling. This post dates after Bitcoin ETFs were introduced in the US. Investment institutions competed to be the first to add them. Morgan Stanley seeks your outperformance. First to accept Bitcoin ETF was UBS. Morgan Stanley may comment days before UBS. The way major banks talk about Bitcoin ETFs as a race is intriguing. Eric Balchunas, a senior Bloomberg ETF analyst, responded to Andrew's piece with Wirehouse updates. His comment says, "I heard from reputable sources that none of them have added Bitcoin ETFs yet. They are currently in the holding pattern, playing compliance chicken to see which one will go first and then cover the others. This suggests it will likely be an all-at-once moment, but when is unknown. This one-time event will be the next great thing for spot Bitcoin ETFs and the underlying crypto asset, allowing tens of thousands of investors to still invest." Mark Yusko discusses Bitcoin ETFs, the bull market, and when this cycle will peak in this video. For more videos like this, share, like, and subscribe.
And we get above fair value. Inevitably, an asset either stays at above fair value and grows into it. Now that's certainly possible. You look at like NVIDIA. Is NVIDIA going to stay at a crazy, ridiculous price? And is the value going to grow into it? Or is it going to crash down back to fair value like Cisco did, like Microsoft did, like Intel did? Here's the crazy thing. In 2000, Intel went up 20-fold over about 18 months. 20 times, just like NVIDIA, right? Everybody said their chip's going to change the world. It's going to be great. Today, 24 years later, it's down like 60%. Because what happened? NVIDIA happened. So is there another company
AMD
come in and
AMD really
NVIDIA?
Yeah.
Probably.
It's possible. Yeah, right.
Not today, but probably.
Yeah.
So my only point there is I don't think the cyclicality's gone. I don't think this is number go up in a straight line. I think we're going to have peaks and we're going to have troughs. And for a while, we're going to make higher highs and higher lows. That's called accumulation, right? So there's going to be an accumulation over the next year or so. Then when it gets too highly priced, there'll be distribution. The smart money, the people who bought early, or some of the whales, will start to distribute to the masses. And then when it falls, they buy back. But here's the part that I don't love. So we have this Bitcoin market that is the spot market, and these ETFs that are based on spot, really good.
Even though Mark has talked a lot about the next bear market, which he thinks will start in late 2025, we are still very early in the cycle. The only reason it doesn't feel that way is because the ETFs temporarily slowed down the flow of a normal Bitcoin bull market. This is also the first bear market year that Bitcoin has hit a new all-time high before the halving event in previous cycles. This has always happened after the halving event. Even more disruptions are expected.
The problem is the futures market got bigger, meaning there are now more places like the CME and the CBOE and all this stuff where futures are available. Now, what does a future allow you to do? It allows you to create something out of thin air and sell it. So in the old days, oil, natural gas, any commodity, gold. In the olden days, if I had oil and I wanted to sell it to you, I had to have the oil, right? I had to be able to
Right.
go get the oil, put it in a barrel, send it to you, and settle up. And then the futures came along and said, no, you can just write a contract that I'll sell you a paper barrel of oil. And then I could pretend that I'm going to go get a barrel of oil. But as
And
long as we settle up the contract before I need to get the
roll it
barrel,
over.
no
Yeah.
problem. So
Mm-hmm.
that allows people to naked short. And if you look at, gold prices for years have been artificially suppressed because
I
the
swear,
big players can sell naked in the
Mark, that
market.
was
See it on certain days, right?
yeah.
We gap down 10% right before the end of the day. Well, why?
Mm,
Well, ETFs can only trade for a very small window at the end of the day. They strike their NAV actually at 359 every
right.
day. And here's the crazy thing. All of the gains in the Bitcoin ETF occurred after hours. There's been zero price increase during the day from 9:30 to 4 every day for the last 3 months, no
Interesting.
price increase. All of the price increase has occurred after hours. Well, why is that? Well, because again, if you have to buy a bunch of something, the oldest trick in the book, you don't actually start buying it. You actually sell it first. You actually might short it. You actually might spread rumors that it's a bad thing. I tell a story all the time. There's a famous trade that Julian Robertson put on in copper, and the analyst came in with this big analysis on all the copper they were going to buy, and he said, "Okay, good, I like it. Let's do it." He says, "Well, how much should I buy?" He says, "No, you don't buy any. You go short 50 million, and you tell everyone we hate copper.
Mm,
Push the price down, then back up the truck and buy it at a lower price." So you can see this happening day in, day out. And I think that's going to continue to happen. And to your point, as the total asset base gets bigger, the ability for the big institutions to put big shorts on to push the price down so they can keep accumulating at a lower price. Absolutely. I think that's, and for the long term, that's okay, because what that does is it creates a more liquid market, a deeper
mm,
market. Now, they're kind of stealing, the institutions are kind of stealing from the moms and pops who are trying to speculate, but speculating is hard.
mm-hmm.
And I'm much more of a buy and hold kind of person. Like, if I like an asset, I want to own it. And then I'm going to own different assets in a portfolio on a diversified basis. And I'm going to rebalance on occasion. Trading is hard. Speculating is hard. So I try to, and trading's really hard when you're going up against people with superior knowledge and resources and tools. Like,
Right.
anyone trying to day trade stocks today, you're fighting Ken Griffin. And if you haven't watched the movie
Yeah.
Dumb Money, watch the movie.
Citadel,
It's
right?
amazing. And the depictions of Ken and of Stevie, they're so good. I mean, they were a little uncharitable, but they were so good. And these guys,
They're
they have
serious,
more
man.
resources, they have more knowledge, they have more tools. There's no way you win, except on a very rare occasion like GameStop. But even then, it was a short-term win, because long-term,
Right.
Hey, Brad Garlinghouse, Mark Yusko, and the CEO of Ripple Labs are both very optimistic about the cryptocurrency market. In a recent interview with CNBC, the CEO of Ripple talked about his predictions for the market in 2024 and said that he thinks the total value of all cryptocurrencies will double before the end of the year. He told them, "I've been in this business for a long time, and I've seen these trends come and go. I'm very optimistic. I think the macro trends and the big picture things, like the fact that ETFs are driving real institutional money for the first time, are driving demand." And at the same time demand is rising, it's not hard for someone who studies economics to figure out what happens when supply goes down and demand goes up. He also said with hope that the total value of the crypto market would easily double by the end of the year, rising from $2.64 trillion to over $5 trillion. What do you think about Mark Yo's talk and Brad Garlinghouse's optimistic $5 trillion prediction for the crypto market in 2024? Please leave your thoughts, comments, and observations below. And don't forget to like this video. If you want to see more movies like this, please subscribe to the channel and turn on post notifications.